All right, guys, the news just came out that Robinhood is going to be using Goldman Sachs, or at least right now is thinking about using Goldman Sachs as the lead for its IPO. Robinhood wants to go public. The news was on Reuters' desk, and basically they're running through the rigmarole, all these steps that are coming up next. All right, looking at it, this is what we've got. They are looking to be valued at more than $20 billion. Robinhood was valued at 11.7 in its last private fundraising round in September. So Robinhood is looking for a valuation of almost 100% higher than where it was valued just a few months ago. So this is important here. Robinhood has raised over $2 billion from various private investors, including Andreessen Horowitz, Sequoia. These guys are top-notch, no doubt, and we've got Snoop Dogg hanging out there, as well as a Jared Leto. So look, what's going on here is that these insiders are going to be selling the day the stock goes public. They're not going to sell everything, but they're definitely going to sell a certain percentage of their shares that they've been holding for a long time. And essentially, that's one of the key points of an IPO. It's allowing these insiders, these guys who came in early in the earlier rounds of investments, these guys get to now kind of cash out a very high valuation. And that's the reward for investing and taking all the risk at the early stages. Another reason why Robinhood is jumping into the fray right now is that the appetite for stocks initial public offerings is hot. We've got all these SPAC vehicles, we've got this and that going on. Snowflake had a great IPO. The market is understanding two key points. And in both of those points, we as retail investors are the suckers. We're the suckers because this is what's happening. The investment banks are realizing that they're going to be able to find a certain valuation. They're going to find a price point at which they're going to be comfortable. And at that point, they're going to say, you know what? Robinhood's going to go IPO at X amount of dollars per share. And this is what's the cool thing right now. The investment bankers, these people look at this. This is a crazy list of IPOs that happened in this year alone. It's incredible how big of a list this actually is. So let's not get distracted here. So what's happening is that these investment bankers are realizing that by going public now, we are able to maximize our gains, because this is most likely what's going to happen. The day Robinhood stock goes public, a bunch of traders, especially Robinhood traders themselves, are going to jump into the stock. Robinhood is not going to have a lot of shares available, so their float's going to be small. Robinhood is going to have a lockup period like any of the other stocks do. There's going to be a low inventory of stocks, and there's going to be a high demand from investors. So a couple things happen again. First, the stock price pops the day of IPO. And then in the subsequent 1, 2, 3 months post-IPO, because there aren't enough shares in the float, the stock itself has a crazy push to the upside. This is what the bankers are counting on, so that Robinhood insiders get to exit a bunch of their shares on the day of IPO, and then they get to hold on to some of those shares, which they will essentially release during lockup. And during lockup, a lot of these shares are going to be put out to the market, and most likely at a higher price, because that's what's been the pattern so far in 2020. So in the interim, Robinhood's got to fix a few things. It's got to stop crashing. It's got to bring more clarity on how it's carrying on and selling its deal flow, how it's selling its trade flow from its customers to Citadel and all these other big players out there. These things are going to need more clarity, and Robinhood's certainly going to provide that. And then the question that comes up again is that, okay, is this a new boom bubble in fintech? Are we now going to see a bunch of fintech companies come out? Are we going to see a bunch of fintech companies go IPO? And then are we going to see fintech companies becoming the next bubble? All of these, I don't know. My job's not here to pontificate with a solution. I'm just looking at the different variables that are out there. And the most fascinating thing for me in all of this is that the market is looking for junk like this. And I'm not speaking bad about Robinhood. I'm just talking about stocks which are going to come out at this half-baked value. And then from there, the market participants themselves, retail traders, are going to push this thing up. And then the insiders get a even greater payout during the lockup exit. This is all I've kind of got here right now. There's not much available. Robinhood and Goldman Sachs declined to comment, of course. Robinhood is doing this and that. We'll see what happens. But I just wanted to put this video out there because Robinhood wants to go public. Goldman Sachs is going to help it go public. And why not? Why not use Goldman Sachs to go public? I'll see you in the next video. Bye-bye.